Hello, everyone, and welcome to Accelerating Payments Modernisation. I'm Adele Lewis, Community Manager here at eSynergy and your host for today's session. For those who are new in the audience that are joining us today, just a bit of an overview of eSynergy. So we're a technology consultancy and we build products, platforms and services to accelerate value for our clients. And we work with leaders of scale-ups and enterprises in highly regulated industry sectors. And we have a number of customers within the payment space, which is why we're delighted to bring this topic to you all today and to hear insights from Elavon and GoCardless around their drivers for modernising payments and the operational benefits of architectural modernisation. So in a moment, I'm going to tell you a little bit about our speakers, but first, just some housekeeping. If you have any questions, please fire them across in the chat box, and we'll make sure that we get to them at the end of each talk. We're going to be recording the session, and this will be shared by email after. So there's going to be plenty of time for Q&A, and we're also going to be finishing today with a panel discussion. So start to have a think about if there are any topics or maybe challenges that you're facing within your organisation at the moment. Please do share those so we can try and cover this and be, hopefully as helpful to you as possible during this time. So let's begin. I'd first like to introduce our first speaker today, Deepti Akali. Deepti is Head of Gateway Commercialization at Elavon Merchant Services and is responsible for influencing and executing the strategic direction for the business. Responsibilities include driving revenue growth for Elavon Gateways, penetrating key markets, competitor developments, maintaining the brand reputation for excellence. So without further ado, please give a warm welcome. Deepti, over to you.
Good afternoon, all. Hope you're all well and safe. So thank you so much for joining the chat on payment modernization and why are we talking about this today. Well, thank you, eSynergy team, for giving me the chance to come and speak to you all. So like the way, eSynergy, the team has started, I'm just going to go through a little bit about Elavon just before, we go through the actual presentation of the slides and what do we do and what are we about. So in terms of the background, Elavon is for the people who are not aware, we are the payment acquirers and have been in business around over 25 years. We have an international processing platform and we are hooked up to all major schemes and we are across all 36 countries from European perspective in terms of the payment technologies. We have, this is a single platform which is used for both our EU and North America side. So it's a truly international processing platform from the customer perspective. We have lots of value-added services like your DCC, MCC, tax-free, and all the regular acquiring bit, and a terminal suite where we have right from a standalone perspective to all the way to integrated. So it is having a range of the product suite as well there. And security. So we have an award-winning TRA services, which is what the acquirers, from acquiring perspective, we've just launched and got an award for a couple of times now this year. Take TRA 500 and TRA, Elavon TRA, which is a transaction risk analysis platform as part of our fraud offering. So that's a little bit about Elavon and why am I coming and speaking to you today. From background perspective, the company is part of a bigger group, of course, US Bank. So US Bank is based out of US and they are the most stable, creditworthy and ethical global banks and have been recognized over some time. And as you can see from volume perspective, we have North American volume and then European volume, and we have 6.2 billion annual transactions which go through our platform. And across the two platforms or the two regions, we have over 5,000 employees now, and it's growing as we go through. So that is a little bit about the parent company. In terms of the European outlook, we have 2,000 plus 2,000 plus employees across Elavon Europe. And as you can see, we have a number of offices around European market and 4 key operational hubs around Ireland, Germany, Poland, and Norway. So that's one of the reasons I thought it'll be good for me to come and speak to you, because given we are in EU and North America, what is that we are looking to do as an acquirer and what is that our perspective is on this whole payment modernization platform. So I thought I'll break this up with the six different areas, right? So it's not mapped. The slides further you see is not mapped one to one, but it just gives you that why am I breaking this into these six different distinctive areas for me. So payment landscape being the very first one. So the payment landscape is changing faster now than ever before. And we are not just seeing the modernization of existing payments infrastructure, but also the introduction of new payment infrastructure on multiple fronts. So that is something which is changing, and we are thinking about it. Scale. Well, interestingly enough, these changes are not localized or specific to countries, but are predominantly being developed continentally or global scale. So we need to look at everything we are delivering in a way that it is scalable and can do the right things. Payments journey, let's not forget that's the whole value chain there, and it's the choice, which is the greater level of choice to the payment, to our merchants, to our consumers, to make sure that the whole payment journey and the providing of the overall value to the customer is there. So that is another one we are looking at. Frictionless transactions. So this is where the industry is evolving towards us more from convenient payments model from consumer to merchant interaction. So frictionless transactions have always been an end game for most merchants and service providers, but we are seeing a beginning of the end of the checkout as we know it. So thinking about the buy now option in your Amazon, to how that gets integrated into your B2B space or B2C space more, and what is going to look like. So that is something we are looking at as well. And the last two then is the customer expectation. Now with all these various things happening, the minimum expectation from customers are being always on, right? So the trend pointing towards the instant payments are the key reasons for us talking about this topic today. And regulatory being new standards, which is constantly being imposed on how you keep in loop with that. So these are the six areas we as an acquirer are primarily looking at and thinking that, okay, what can we do differently, and what is that we need to do going forward in order to keep ahead in the market. So for me, it's a twofold challenge. And the twofold challenge, the reason I'm calling it twofold challenge is because one, how do you provide these services to the customer? And two, what is that you're developing from value-added services on top of to support those things? So to integrate the new forms of payments and offer genuine benefits for both merchants and consumers, you have soft POS, you have open banking, you have crypto, and you have NFTs. So going a little bit more on each one of these. So if I think about soft POS, has the potential to turn out any mobile device into a payment terminal. So we may see payment services move to a software layer rather than a hardware, and reducing the expense for merchants in maintaining the specialist equipment and enabling merchants to serve customer in a much more flexible way. And that is actually, apart from e-commerce, from POS perspective, which is point of sale perspective, it's a key driver to do certain things more. And it's a key benefit right now, which we're working on. The second one on this one is open banking. And I don't have to tell, I'm sure many of you know this already, but account-to-account payments via instant payment networks to improve the whole cash flow for merchants and security for consumers, as well as forwarding, having the SCA as a standard is a key thing for us. So that is something we are actively looking at and doing more about. And the last two, crypto and NFTs, from crypto's perspective, the whole idea of the infrastructure moving towards the democracy, so the whole thing moving towards a central sort of entity or a payment network where no individual entity owns the payment network. Instead, the network is supported by a community of interested parties of entity. No matter how big or small these players are, we need to keep that in mind, because as an acquirer, we need to see how are we hooked onto these crypto networks or NFTs, and what is that we need to do. So those are some of the key outside in view for us, is that we need to look at from customer demand perspective that what is that we need to do. And if I were to think about the second part of the problem from our perspective, is the developing the whole value-added service suite in a way so that it grows alongside your payments capability. So Sentinel here might not make sense to many of you. This is a internal, almost a tool name for us. It's all it is trying to say here is that it is, given that we have so much data with us, how do you support this business? What can you do out there? So with a greater number of payment methods ever than before, business need to maintain more connection than they previously have. And it is vital that these connections are monitored and merchants are alerted if there are issues are there or not. So we have created an algorithm and a system to serve our top 20 customers, for instance, or top 25 customers, where we are going and looking at this and actively managing them so that, this can be a value-add service you can provide alongside everything else. Request to pay is another one where the greatest scope to interact with consumers through new capabilities. Request to pay enables merchants to push the payments out to their consumers while providing flexibility in the way that consumers pay their bills. It's one of those upcoming things. It's not so much, it's one of those where we are seeing that high quality customer experience can be met, and then we can provide the demand for it. And the last one, when I say customer data, for me, it means that the ever-growing use cases for customer data has been constant theme over last 2 decades, if I were to think of it. And we are getting to a point where tokenization of customer data has the potential lead to seamless payment journeys across merchant ecosystems. So data held centrally by a payment provider with the consumer's consent could deliver one-click payments across all participating merchants. And this is what I meant by ending of checkout process, because we need to say how this one-click payments and how this support value-added services can be provided to the customers across this whole network. So these are the 2 challenges mostly we are looking at, and we are thinking, okay, what is that we need to do more in order to bring this more to life, and in order to support our ever-growing merchant and customers' demand here. So moving on to the next slide, the way we are looking at the modernization of payments is at multiple levels, right? Because it is happening at multiple levels. So it's happening at the local level, which is where you call it buy now, pay later. You call your local schemes. You think about any local payment type, which is there, which is like Blick for Poland, for instance, or GiroPay for Germany. These are no longer an exclusive. This is something which is part of your regular suite offering now. From regional perspective, and we are seeing this more and more, account to account becoming and picking up a lot more from regional perspective, and we need to do a lot more on that. And from global perspective, we are doing almost a proof of concept currently for cryptocurrencies, because this is where we need to understand, are we going to be late in the market by the time as an acquirer if we don't do or don't think about crypto today? Crypto has its plus and minus, and I think as an acquirer, we are thinking about it, and we are thinking, okay, how much do we want to be involved and how less we want to be involved in it? So we are doing a proof of concept currently, because if it's a global customer, it is something which is, there is an ask for it. So just to give an example, Gucci today as a retailer is taking crypto as a payment type. If more retail customers are coming up and asking for crypto as a payment type, what is that we as an acquirer can provide them? And that is one of the reasons, or not just the reason, but one of the reasons we are looking at, okay, how do we play in this space and what can we do globally to actually support our international platform? So those are the different levels or the multiple levels of payment methods or payment modernization we are looking at. Now, it is very, for me, it's very simple to understand or think that you all know what I mean when I talk about what is required from an internationally minded online business. But I thought, I'll just break it down quickly for you. Some of you will already know this, but it doesn't hurt to know for the people who have not heard about it. It's the real-time bank transfers. We talk about e-wallets, mobile wallets, direct debits, payout services, local schemes, cash payments, prepaids. These are just some of the olden where all the acquirers were playing, getting added on to the regional and the global things, which is coming on top of that. So those are the ones which is where the innovation or the more work is happening from acquirer perspective. Now, just to bring this more to life, if you look at it, and I hope you can see the small payment type breakdown, which is the smallest box there. But if you look at it, as per 2020 data, this is not 2021, so it's not refreshed, but I'm sure I think another month or two, when the new data comes out, we would know what is the 2021 uptake has been. But as per the 2020 data, 45% is only card-based payment. So you still have 55% across Europe and across the different regions. We are seeing that how a pan-European sort of gateway or the acquirer needs to have all these different payment types. So 25% bank transfers, 5% cash-based payments, 23% wallets, 2% other. And don't forget, this doesn't even have the mix of account-to-account and other things in its the full entirety. So I'm sure 2021 data will look a lot more and a lot more appealing to say why you need to think about payment modernization today, why you need to act on it today, if you want to be relevant in the market in order to get certain bits done from the offering perspective. This slide, I just thought I would bring more to life from the growth perspective, that from market perspective, by offering these different local payment types or the local LPMs, which is what we call it, we see a big growth in terms of verticals. So retail, digital goods, food, beverage, these are something we have seen last 3 years of leaving 2021, just because I don't have the data on me, but I don't believe it will be any different, that the growth on these, because of LPMs, has gone massively up. So from our perspective, by offering the data, by offering the payment types on the left-hand side, which is on the Trustly, My Bank, Blick, which is very specific to the region or very specific to Blick being Polish, it is something we need to make sure that we are speaking customers' language, and that is driving a lot more growth and a lot more uptake from merchants' perspective. So it's a key from us for us as an acquirer to be relevant and to get some things, to just offer this as a standard offering rather than an exclusive offering. So this slide, I just thought I'll just because the other one wasn't very clear in terms of when we say bank transfer, these are just to name some of the few. This is not the exhaustive list by any means, but this is just to say these are some of the very common ones which is being used today across European market in terms of bank transfer. There are the different card types and the local card types. What you look at, you have the cash payments, you have the direct debits, you have the vouchers and the e-wallets. So these are some of the popular ones we are seeing the demand for out there across European landscape, and this is why we need to act upon it. So before moving on to the regional side of things, from local perspective, if I were to conclude it, I'm thinking this is something which needs to be as part of the standard offering. This needs to be, you need to speak to your customer's language. You need to understand how simple the API integration is going to be, or you want to create that integration for the merchants to get this integrated on and be on their payment pages or as part of their POS servicing. And above all, this is something, how are you bringing it commercially to the market? So this is something for me is all we as an acquirer are thinking from local perspective and doing more on that. Moving on to the regional side of things, open banking. So now this is a very busy slide and I'm not expecting you to read anything on this, but we know that most of us use account to account in some shape or form today, right? How the payment journey begins with pay by bank at checkout, or request to pay, or to using it, pushing the whole payment transactions through the network and coming back. But for me, open banking from acquirer perspective, we are looking at, okay, account to account payments via instant payment networks can improve cash flow for merchants, security for consumers, and as a payment go through, it will be as per SCA standard. So from our perspective, this is something, the demand and supply from our perspective, this is something which is there. And it is right now very, very real for us in terms of getting the work done. So if I look at the greater scope to interact with consumers through new capabilities like request to pay, for instance, or providing consumer the flexibility to pay is something is really high. And this will provide the consumer the quality experience they are really after. And this is no longer, again, as I say, this is no longer a thing where consumer don't understand they need it, but from merchants' perspective, this is another one of those where they are seeing the demand. So as an acquirer, we are looking at, okay, what do we need to do? How do we need to build something more on that? And some of the other acquirers are already out there. We have done our bit of work as well. And the ever-growing use cases for customer data, how do we wrap this service in a way that it becomes actually a true value-add service? So as I said, the ever-growing use cases for customer data has been a constant theme over the last 2 decades. And if we are going from point, we are actually getting to a point where tokenization of customer data has a potential to lead to seamless payment journeys across the merchant ecosystem. So data held centrally by a payment provider, which is where we come in play, and with the consumer consent can be used to deliver the one-click checkout experience and to all participating merchants. So from us, open banking is just not another way to pay it to the customers or put the transaction through, but how do you wrap this into a well-rounded proposition for the customers is where we, from an acquiring perspective, are looking at that. And that is where most of our regional work is being getting basically constructed at. And finally, from global side, as I said, cryptocurrency or the Bitcoin is what we are looking at. It is, as the time goes, our understanding of opportunities and threats on crypto and blockchain is going to continue to develop, right? But it is already clear that crypto currently competes with the existing payment infrastructure. So as an acquirer, if we are not thinking about how are we going to be in this chain or how are we going to be party to this conversation, we will be already ruled out by the time if and when crypto becomes the main payment type at some point. So we need to see how the whole centralized network is going to work for us and what is that we need to do. We are definitely seeing a rapid growth of new payment infrastructure, which like Lightning Network, which is what the main thing, the Cash App and the Lightning Network, which is it built upon, has grown significantly. And both in the number of connections that make the network and the volume of Bitcoins providing liquidity to the network. So we need to look at that. How do us as an acquirer are playing a role in this? So for us, in terms of involvement from payment companies in crypto, I have split it into two different areas. One, supporting payments, and the second one, supporting commerce. So if I think about supporting payments, there are multiple roles for payment companies to fulfill the world of supporting crypto payments, right? So delivering simple, intuitive user interfaces. You're thinking about reliable connections because, let's face it, if it's a decentralized one, how do you make sure the connections are always up? The supply liquidity and the security. For us, the cash liquidity and the security, these are some of the things which absolutely are the key supporting infrastructure networks, supporting infrastructure we are looking at too as we go through this. And supporting commerce perspective, we are looking at where payment companies can support merchants to make the most of the new technologies like NFTs and other bits. But from our perspective, what we are doing is a proof of concept on this to make sure that how are these compatible with our current existing consumer payment behavior and what is that we need to do. And because cryptos networks are there is a speculation that it's not a trustless system. We have a general trend of falling, the trust in this whole established organization. So we need to look at, from acquiring perspective, where do we play in this whole ecosystem and in the journey, and how the payment companies, or the technology, which basically the technology sitting behind it can provide us more and more support in terms of making this reliable as we go through this whole revamping journey on the payment modernization side. So those are the three areas from local, regional, and global, what we are looking at. And of course, let's not forget, all of these have the regulatory aspect to it. So the new regulatory, like the different regulatory requirements, we need to see how are we building upon that. And what does that mean in terms of SEA? There is the new requirement coming up from 22022, which is the new data requirement which is coming up. So how are we going to provide all of these in a way that we still remain relevant and we still be market leading, but in a way that it doesn't put us at a risk too much? So that's where we are playing today from the payment as a payment methods type side of modernization. Now, if we were to offer all of this, what we have just spoken about, and if we are looking at everything we are doing, how are you going to support the new landscape? From acquiring perspective, and by the way, this is the Sentinel, some of the screenshots I've put it out there, is we need to create a support model, which is what we have done, to talk about what is the operational expectation here, what is the operational support here, how do you do real-time monitoring, what is your call to action is going to look like. So if you look at the green dots on the European map, you look at that, those are in real life is an active or a pinging sort of icon, and it collects data in the real time. And because our customers operate in 24/7 mode, they expect to transact anytime without breaks in service, is day or night now. And if the ability to transact is compromised, regardless of the fault, it is our responsibility to do everything possible to keep the operations functioning. And I think that is the whole crux of things from our perspective. It is. So if any of these green dots were to go amber, we click on it, we can figure out, okay, what is the problem? Is the problem in schemes? Is the problem with the acquiring? Is it the problem which is happening on the cards? If any network is down? And we can proactively let our customers know that there is a problem upcoming. You might want to fall back to this, because you can't have all of this modernization done without having the right monitoring system put in place for us, for us as an acquirer to support the customer or merchant demand in this case. So that for me is a crux of things in terms of the support model, because we can do all good things, but if there's no right call to action or support model is in place, it just wouldn't fly the way we would think. So this is why this artificial intelligence model that applies machine learning to the consumer payment transaction in real time, and we monitor it. And currently we monitor our top 20 VIP customers, because we are still piloting this to make sure that it is if there is declines, referrals, if anything is too high, we can go back to the crux of the problem. And because we operate in around 36 countries, having a geographical dashboard helps visualize us the health of the continental operations, to say what is going wrong, what do we need to do, and how do we deploy that. And I think that for me is the key thing from an optimization or customization point of view that we need to do to get this into a well-rounded sort of offering. So in terms of my final slide, if you are on the journey of payment modernization, the same as us, there are 3 key outcomes to look out for. How do you make it simplified approach for merchant integration and commercial model? No amount of, if you are in merchant shoes and you think about, okay, I have to do all these payment methods, I have to do all these integrations, and with these integration, I have to look at everything from the support perspective, the integration perspective, the development perspective. How am I going to do all of that? If you don't have the simplified approach for merchant integration, which is what, when I say that, I mean the APIs built, but integration, the microservices, the VIN, the easier you make it merchant to integrate, the more successful it is going to be. And without a commercial model to support the simplified approach, you're not going to gain the overall, the whole breadth of the outcome you would be looking out for. So that would be number 1. Number 2 for me will be data intelligence and the role of machine learning to support the offering. So as I said, what I just showed you in terms of Sentinel, if Sentinel or no Sentinel, from a support perspective, as a result of COVID-19, digital and real-time payments have undergone a decade worth of innovation within the last couple of years. So as per the latest reports, for real-time, by 2026, 25% of our global economic payments will be real-time based. And in EU, however, the figure is predicted to be only about 12.5%, while in India and South Asia, it is likely to be 80%. So clearly there is an innovation gap which is emerging. And to modernize this, however, you should extend this beyond closing this gap. So you need to look at something, and you need to look at, from data intelligence point or the data captured, how do you make this into a value-added support offering? You can do that to give it to your customers. And the final one will be on the operational excellence. And when I say operational excellence, it's the support. It's the support you can provide to your customer to actually navigate through this big, the journey you put the big journey they are on, and how to make sure that you are alongside the customer. As from acquiring perspective, we are alongside the customer to make sure that this is no longer a value add, but more like a given that we just provide, given that we have this much payment modernization, we provide this operational excellence along with that. So those will be the key outcomes to look out for if you are on the similar journey with us. Just looking at the time, I think I am covered there. So it's a good time to actually hand it back. Is there any question or anything from any of the slides I've presented so far, or in general?
Great. Well, thank you so much, Deepti. We're now, like you say, going to go to the Q&A part. So please, if you haven't, I think there has been one question that's come in so far during your talk, and you may have had a question posed to you directly. So check it out in the chat box. You might want to stop sharing your screen.
So I have a question directly as an acquirer. What solutions are putting in place for merchants? As I said, the whole thing, this is a direct message to me. So let me see this. Yeah. So from acquirer perspective, what we are looking at, as I said, is the overall bundle offering. That's what we are looking at. The solution which we are putting for merchants is, how do you make this into a simplified offering? It cannot be this daunting just by looking at all of this. If the customer sees this being a massive intake, it's not going to be the right thing for them to do, or they might just back off. So it's just that, how do you simplify this as an approach to an acquirer? That's what we are looking at. Definitely, that's being one of the Adele, that's one of the questions which is posted to me directly. Okay, there's another one. What have you found to be your biggest blockers in achieving these goals? It's the technology. It starts with the technology, because if the technology is not speaking, like, I know it's people, process, technology, but from our perspective, it is technology. How do you make it more simplified? How do you make it relevant? How is microservices going to work in this new framework? And what is that we are looking to do more and more to develop that? So technology does remain a key challenge, because come data, the algorithms, talk about the real-time payments. Is the system able to provide all of that is our key thing. So that definitely is one of our the biggest blocker at this point. Process and people just comes around it. Once you know what you're doing, you know what. If you know how, everything else then falls into place. So it's the how bit which has been slightly more challenging for us, in the sense that, how do you make this work?
Great. Well, Deepti, thank you so much. We're now going to head over to our next speakers. There will be plenty of opportunities to continue asking questions. Please do post them in via the chat, and we'll also try and reach them as part of our panel discussion. So next up, we're going to be joined by the team at GoCardless, and I'm delighted to now welcome Lily Krakowski, Senior Product Marketing Manager, who has extensive expertise in open banking and new account-to-account payment capabilities. And also Michael Bridgman, Director of Product Management, whose role is looking at identifying opportunities to improve outcomes for GoCardless's customers. So Lily and Michael, thank you so much for joining today. Over to you both.
It's great to be with everyone today. As Adele said, I'm Lily. I'm a product marketing manager at GoCardless. And kind of before we dive into the kind of meat of today's talk, we wanted to give you a super quick introduction to GoCardless, and in case you're not already familiar with us. Oops. So for over a decade, GoCardless has been focused on taking the pain out of getting paid so our customers can focus on what they do best. Today, we have over 70,000 businesses working with us around the world, ranging from really small businesses that could be mom and pop shops to some of the world's largest brands, ranging from companies like DocuSign, The Guardian, charities like Just Giving. We process today over $30 billion worth of payments a year. And we're already kind of doing more than 160,000 annual transactions globally, and that's growing. So if you have kind of any other questions, feel free to reach out. But that's enough about us. Today we're here to share some of our perspectives on how we've seen the account-to-account payments landscape fundamentally shifting kind of over the past few years. And largely this has been due to open banking, better technology, but importantly, kind of changing consumer and business expectations on the way that people pay for goods and services, largely online, but also in the real world as well. So we'll cover kind of a few key areas. We'll talk about kind of what it tangibly means to enter a new generation of payments. What do we mean when we're talking about account to account, and what that means in sort of real terms, how it's benefiting businesses and consumers, but also kind of more specifically, what is the introduction of kind of newer payments capabilities that are coming down the pipeline, like variable recurring payments? What does that mean for the UK? And then sort of what is regulation sort of overall impact on the adoption of some of these newer payment methods, and how is that sort of influencing consumer adoption and businesses' ability to respond? So, the concept of, I think, like Deepti said earlier on in her presentation, the concept of account to account is nothing new. Direct debit, GoCardless, we've been doing this for a long time, but actually direct debit has been around a really long time. Something like, the back scheme was introduced something like 50 years ago. But in recent years, this space has gotten really, the account to account space has gotten really interesting because of, what open banking has made possible. And now we're starting to see companies being, merchants being able to address an increasingly wide variety of use cases as a result of changes in open banking. And it means that payments and customer banking data can now be safely accessed to a wider set of use cases, like payer verification and credit checks via account information services. And payments is equally exciting. We're starting to see it being used for e-commerce, invoicing, B2B type payments, but also point of sale as well. And I think one of the things that's important to realize, especially because this shift isn't happening overnight, and this is something that Michael will talk about a little bit later, I think a lot of people are talking about open banking. If you look at the payment space, it's something that's kind of on everybody's lips. We have seen big, fundraisers recently, like Kevin, who's kind of looking to use open banking to take on point of sale. Apple is an acquisition of Credit Kudos. But, are we really seeing a shift? Like, what does that mean in practice? Like, what does that mean I can do today? Are consumers actually adopting this stuff in actuality? And the data is starting to suggest that is the case. While it is still kind of early days still, and particularly in payments, I think, I think people wouldn't disagree to say that the early uptake of payments at the beginning, was maybe slower than expected. But more recent data is starting to suggest that, account to account payments will account for 30% of e-commerce transactions in Europe by 2024. This is a really aggressive estimate, but, this also includes both, instant bank payments as well as BNPL. And, over 1 in 2 Brits are estimated to be using open banking powered payments on a regular basis. And in many cases, they might not even know. And so, some of the data is really starting to suggest that we're seeing a shift in the tides. There are, 5 million active users of open banking enabled products in the UK. And payments has seen a 400% increase just from 2020 to 2021 alone. But it's also kind of important to think about, how is this changing around Europe and around the world? And it's interesting. We think of the UK as a really mature market. But if you look at the global picture, Accenture estimates that open banking or account to account is roughly a $416 billion opportunity. This sounds like a really big number, but not all countries have taken similar approaches, and we think this is largely because of regulation, infrastructure, incentive from the banks, culture, and things like that. So it is quite a complex ecosystem. And at the same time, we think of the UK as quite advanced, but Ideal has been around since 2005. Pix or PX in Brazil went live in 2020. UPI in India, for example, while it's already quite advanced in terms of taking payments, its data, data sharing or account, like what we would call AIS or account information services, are still quite nascent. And the US is a really interesting market. In case you can't tell from my accent, it's actually where I'm from. And it's been a largely market-driven approach, despite the current administration talking about calling for more competition and regulation in the market. Things are still quite bogged down with complaints, challenges around privacy and security. So it is a space to watch. It's obviously a really interesting market, and we'll kind of continue to see what happens there. But I think ultimately, in a digital world, there's no reason that payments shouldn't be directly between a consumer and a merchant. And the European market is regionalized. It's very complex. If you look at kind of just the world of kind of bank transfer and the thousands and thousands of banks all across Europe who have different levels of digital maturity, how do we kind of simplify that process so it's easy not just for payers but also for businesses? But I think also at the same time, it's important to kind of contextualize all of this inside of the larger macroeconomic picture. I think even in just recent weeks, it's clear that the market tides are shifting. We're starting to see rising interest rates. And I think that there's going to start to be increased pressure on consumers they're going to want to have more control over their finances, more visibility over their spending. And so I think, the philosophy, and the way that we think about it at GoCardless, we really think that the key to success is combining the infrastructure and the open, the rails that exist today and building for the rails of the future in order to be able to offer an experience that's faster, structurally cheaper, and more secure. And I think kind of my final point before I hand it over to Michael is that, I think there are two really interesting things happening kind of at the same time. So on the one hand, all of this stuff, payments are digital, payments are online. And as a result, we're starting to see fraud rates at an all-time high, and these are projected to just continue growing. I think we're starting to see, it's estimated that payment fraud losses are expected to exceed $40 billion by 2027. And so you have this kind of concern in the backs of people's minds, but at the same time, consumer and payer expectations are only increasing. I think, offering a quote unquote seamless checkout experience these days is probably table stakes. I think payers are expecting more or less kind of this concept of invisible payments. They want really good but they also want really good visibility over their payments. So businesses are then kind of it sort of falls on the shoulders of businesses to think about, all right, and payments providers, like how do we ensure that we're offering secure and safe and efficient payment processes while ensuring that we're offering a differentiating customer experience at the same time? And so this tension, I think, is really important. So, in short, it's a super exciting moment, and we think it's kind of really only the tip of the iceberg. But to talk about that a little bit more and to go into a little bit more detail, I'm going to hand it over to Michael, who's going to talk to us about some of the near-term opportunities as well as the wider kind of A2A adoption in the market.
As Lily mentioned, I'm going to be talking a bit about what account-to-account may mean in the context of the payments landscape, following Lily's review of the growth, I guess, of account-to-account from the very early days through to today. So first, what I want to do is set the context with a view of where cards and account-to-account payments sit next to one another. So this is, I guess, a straw man of payments use cases on the x-axis at the top, and then cards and account-to-account broadly on the y-axis. And here I'm comparing how cards currently serve the market, and fundamentally cards do serve the market quite well. Of course, there are some challenges for particular use cases, but broadly cards, credit and debit serve a range of use cases with a wide degree of applicability. When you get to account-to-account, it looks slightly spottier. And to be fair here, I've aggregated, for instance, many of the payment mechanisms that Dipti was talking about, and there's sort of one-off PIS capabilities that serve traditional e-commerce and in some cases physical retail. And that's in addition to the open banking or payment initiation capabilities that are emerging and sort of stitching together an ecosystem across Europe and as Lily mentioned, across other payments environments as well. And that serves those one-off payments quite effectively. In terms of recurring payments, obviously bank debit is available globally, SEPA in Europe, BACS in the UK, ACH debit in the US, BEX in Australia. It really is a global phenomenon that's been around for a long time and does serve recurring use cases quite effectively. Now, that said, there are challenges with both the one-off payment initiation capabilities, both through open banking and PSD2, as well as the existing local mechanisms that exist. And there are also some challenges with bank debit, which means that not only can neither serve has either been able to serve the entire market, at the same time, it also presents some challenges in the markets that they do serve today. So I'll go through a couple of the challenges that we've seen with direct debit or bank debit in particular, because I'm keen to illustrate sort of how the market's changing, I think, to try and address those things. So if you want to jump to the next slide, Lily. I won't run through all of this, but I think fundamentally some of the challenges that we've seen from our merchants with bank debit, and the reason it's not able to serve more use cases is, for instance, where you're trying to ship a physical good after a payment's been made. The timing and the risk that's introduced by bank debit in its slow confirmation timings makes it infeasible for a number of those use cases. Equally, in some markets, the US being a great example, your customers are just going to be more used to card payments. And so it's going to be difficult, even though you as a merchant may want to use bank debit, it's going to be difficult to change those behaviors. And then finally, in addition to that risk and that consumer preference component, there's obviously a speed challenge that bank debit has introduced because it's based on sort of older rails. And so as a result, as I say, it's not been able to serve as many use cases today as we might like. And it's primarily really, really useful for utilities, for instance, for health and fitness like gyms. It's useful for newspapers, maybe higher value transactions where the costs aren't as high. But really, it's extremely useful, but quite segmented in those areas. And as I say, a lot of those one-off capabilities that are available through, for instance, Ideal in the Netherlands, or P24 in Poland, or Pix in Brazil, or UPI in India, are really only capable of serving those one-off use cases effectively because they do require that SCA on absolutely every transaction. And so you wouldn't be able to use them on recurring or reoccurring transactions, or those sort of one-click interactions that you really want to look for. But I think one of the interesting things that's changing the account-to-account world is the introduction of new capabilities that they call in the UK sort of variable recurring payments, but is referred by different names elsewhere. So if you want to jump forward, Lily. This is just one of the capabilities being made available through, again, open banking generally, the one-off payments on the one side, but then the sort of the variable recurring capability on the other side. And I think we call it VRP in the UK, but again, as I sort of keep touching on, progress is being made here around the world. In Europe, the Berlin Group is consulting on standards for variable recurring payments equivalents. UPI is introducing recurring UPI. In Australia, they're introducing Pay2. In Brazil, they're looking at adding to Pix recurring capabilities. So I'm going to focus on VRP in the UK just because it's sort of probably closest to us at the moment, but you can extrapolate from this globally as we go forward and look at some of the capabilities. So briefly, why is variable recurring payments so exciting? Well, fundamentally, the change that it enables is using that single SCA, that sort of single authentication process that you currently see through payment initiation services and capabilities like Ideal. You can now power multiple recurring payments of a variable value and at a variable frequency. So in practical terms, merchants could invite their customers to set up a single long consent mandate through strong customer authentication, where they authenticate themselves and provide consent to their bank. And then you, as a merchant, are able to take recurring payments from that customer of both, as I say, recurring value and recurring time. And why this is super relevant is is it looks a lot like direct debit in some meaningful ways, but in others, it looks perhaps more like the experience you might be used to from card payments or bank transfers, where payments occur in real time and confirmation occurs in real time. And so while I won't go into sort of some of the specifics for the UK, there's sort of some wrangling around exactly what falls in scope for now and what will come later, I think what's really important is you're beginning to see an account-to-account mechanism that can serve a much wider range of use cases than has previously been made available through direct debits on the one hand, or payment initiation on the other hand, or those local bank transfer mechanisms. And I think what that means for the payment market going forward is you're going to see a much more compelling alternative to cards through account-to-account. So I don't necessarily mean better than cards, but I mean better than account-to-account has been previously. So if you want to jump to the next slide, Lily. I sort of draw us back to that initial straw man of the payments landscape that we built out. And you can see here that variable recurring payments by one, introducing SCA built into the payment mechanism at the start, so authenticating in a strong sense that user has access to the account that they're using to set up a mandate. And then two, the speed of confirmation and the potential speed of settlement means that all the way from sort of traditional utilities recurring use cases through to potentially e-commerce and those one-click payments that we talk so much about, and those frictionless journeys, all the way potentially to physical retail, all of a sudden account-to-account can begin to play more meaningfully in that area. And again, that's relevant for a couple of reasons, not because cards are going to be replaced or anything nearly as sort of catastrophic as that, but it's important in giving customers more choice. And as we've been talking about a lot today, fundamentally, it's about giving customers in sort of local jurisdictions the choice to pay through the mechanism that they are most used to, and that is best for you as a merchant. So in countries perhaps like Germany, where credit is less used by customers, you now have an alternative payment mechanism that doesn't utilize credit, but is able to serve the use cases that you as a merchant may want to serve more effectively by appealing to the local sort of consumer in a more local way, fundamentally. So I think it has the potential to really have a significant impact on the overall landscape. I think there's a couple of interesting questions. I won't focus on the benefits for the merchants. I think sort of I've dealt with that to some degree. But I think what's really interesting is thinking about why customers care about account-to-account. And we've obviously done a lot of work with this because we want to make sure that fundamentally this proposition is working for both sides of any marketplace. And again, this will differ significantly market to market. But I think some of the really interesting ones, and particularly as we enter a new, perhaps economic cycle, is that customers want to be able to see their money leave their accounts immediately. They don't necessarily want to always have to figure out how much they owe for a particular good. They would like to be able to see exactly what they have in their accounts and exactly what they've spent on any particular good. I think one of the other really interesting factors that has come out of some of our research, and that I think both Diti and Lily have discussed today, is your customers care both about the likelihood of fraud being committed on their card or their account, almost as much as they care about exactly how seamless that interaction is. And so, you as merchants are put in a really invidious position where you have to sort of try and protect yourselves, protect the customer, and provide as frictionless an experience as possible. And we believe that through variable recurring payments, account-to-account is going to be able to facilitate a lot of that challenge that is emerging. That said, of course, there are some challenges, and I'll finish up quickly here. I don't want to finish up on a negative note, but I also don't want to, build out a future that seems almost impossible. There are market maturity challenges that we've run into. Regulation is inherently slow because it's trying to get a wide range of agreement on topics. The attempt to regulate the commercial opportunity often presents a challenge where not all actors can benefit from the value that they create. And in the UK, for instance, talking specifically about banks and how they see a return on the value they create through variable recurring payments. And I think one of the really interesting ones, again, in places like the US where cards are so dominant, is customers don't necessarily recognize account-to-account payment mechanisms. And even if they do, in a lot of scenarios, they don't necessarily want to use them for pay. And so markets look very different all around the world, and different approaches mean different things for variable recurring payment capabilities. There are also implementation challenges. Technical implementation, even in regulatory-driven markets, is different between banks, and that's only going to be more the case in markets that are that are driven primarily by the banks themselves, as different parties emerge to try and drive the agenda within particular markets. And we see that happening, for instance, in the US, where even multiple real-time payment rails are emerging. Partly as a result of that too, user experiences are extremely variable. So you could go through one particular journey with one bank, and maybe you bank with someone else. You want to pay with that bank for a different good or service. The journey itself may look extremely different. And when you're trying to build up a payment mechanism in a particular market, it doesn't help to go through multiple different versions, as it sort of erodes trust to some degree. And then finally, I've sort of finished again with sort of cui bono, who's benefiting from all of this. And fundamentally, it's really important that all the actors in the ecosystem that are required to make this work, from the merchants to the consumers to the banks to the sort of PSPs, are all able to benefit relative to the value they provide, or not everyone is going to want to engage in the ecosystem. And fundamentally, that's important to making this work. So there's a long way to go, but there are also green shoots and emerging signs that this is going to be a really promising mechanism for account-to-account moving forward, and really usher in the next generation as we move away from direct debit, specifically in the recurring place, and some of those local mechanisms too. So I think that's it for me and Lily. Hopefully we shared a little bit about, I guess, the history of account-to-accounts, the reason we think it's really valuable for merchants in a range of different scenarios, and also in sort of a more exciting sense, potentially, how account-to-accounts are become increasingly valuable both for you and for your customers. And we're open to Q&A at this point.
Great. So yeah, we're going to take a couple of questions now, and then we'll lead into our panel discussion. Lily, I think you had a question sent directly.
Yes. Let's see, we have a question here. Given the noise around VRP and also Pay 2, doesn't this mean the end of direct debit?
Maybe I'll take a go with this first. It's obviously a question we had a fair bit, to be honest, in various different forms. So I'll try to be concise. I think the first important thing to notice, or to note in payments, is you will all know is that there are no cliffs in payments. And I heard this the other day from someone really involved in sort of global payments, and I think what that means is nothing happens overnight in payments. Trends build, they become extremely powerful, but seldom does a payment mechanism fall away, in the same way that it's very seldom that a payment mechanism all of a sudden emerges out of nowhere. I mean, if you look at some scenarios, digital payments in France and the US are still getting paid by check. And in no way is that an efficient means, or is it the best experience for the consumer or the business, but path dependence and some of the sort of the built-in requirements and complexity of payments means that these things tend to persist. So I think that's the first thing to note, is whatever happens, it won't happen overnight. The second thing is, it probably does mean the end of direct debit. And frankly, I think at GoCardless and lots of other account-to-account payment mechanisms, we hope it does. As I pointed out, there's lots of weaknesses in the current bank debit system. It's over 50 years old, and we want to make sure we're providing modern payment rails and modern payment mechanisms for both merchants and consumers. And if you look at what's happening in Australia with Pay 2, they've actually designed that payment mechanism to replace BEX, the direct debit equivalent over there. But if you look at the time period within which they're expecting it to happen, it's between 5, 10, 15 years. There's even sort of some quotes of up to 20 years to actually replace direct debit. And so, as I say, there are no cliffs. And so what you're going to have, what you may want to think about as merchants is, how do you both take advantage of the new upcoming payment mechanisms that can serve these markets really well, at the same time as still supporting something like a direct debit, which is going to be around for a long time to come. And so it'll sort of be like the same question as asking, how do I support both cash and card at the same time? Let's take before the pre-pandemic times, you couldn't possibly run a business without, at least a physical retail business, without supporting both cash and card. And I think in the account-to-account space online, you're not really going to be able to serve meaningfully recurring use cases without supporting both bank debit, direct debit, local equivalents, and VRP equivalents, because you're going to have customers who want to pay through different mechanisms. And I think the other thing is accessibility is really important in this, right? Particularly older customers don't have access to online banking a lot of the time. And if we were to all of a sudden switch off bank debit and move across to online banking, you're going to be cutting a lot of people, particularly some vulnerable customers, out of the sort of payments ecosystem. And that's obviously not something any of us want. So yes, VRP will replace bank debit, no, it will not happen in the next year, probably not in the next 5 years, probably not in the next 10 years. And so you're going to want to look for strategies and mechanisms to try and keep both side by side to be able to serve as wide a range of customers as you can in as efficient a way as possible.
I think the only thing that I would add to that is that, I think, and GoCardless is staying as close to that as possible. We were, despite our kind of expertise in direct debit, we were the first, we took the very first VRP back in 2019 in partnership with Starling. We're also working with one of the largest high street banks on a pilot that is launching kind of imminently, that will kind of be able to let people kind of test out, like actual consumers test out VRP in the real world, kind of for the first time ever. So it's definitely early, but we're super excited to be kind of at the tip of the spear of all of this stuff. I see a question in the chat. What are your thoughts from Gal? What are your thoughts in regards to insufficient funds and chargebacks? Are you thinking that AIS would mitigate that?
I'm happy to take another go at this. I think it's a great question, Gal, and certainly in the context of bank debit specifically, one of the bigger challenges we see is that because the payment timings, a payment might fail a couple of days after it was initially intended to be collected, or you might see chargebacks from the customer, much like you would in the card scheme. So I think there's a couple of parts to this answer. Sort of what can we do now in the context of what's available through open banking and bank debit, and what does the future potentially hold in the context of these local payment mechanisms as well as variable recurring payments. So to answer the first half of the question, you sort of half answered it yourself. Yes, absolutely. Account information can do a couple of things, we think, to address both insufficient funds and chargebacks. One, it's quite helpful, obviously, to understand the state of the customer and get that sort of awfully important data on whether that customer is potentially creditworthy. You can do that at the start, obviously, of that relationship. It's worth noting, of course, that if you were purchasing a digital streaming subscription, you may not, as a customer, be that willing to go through an account information journey and provide access to that data. So you've got to be wary about, or we have to be wary about, where we want to use account information to try and do this. The other advantage that account information does bring, however, is obviously if people fall into arrears, it can be really helpful to understand their position, understand if they're a vulnerable customer and what to do about it. Then secondly, with regard to chargebacks, we're actually engaging at the moment with the direct debit or the bank debit regulators to ensure that where AIS calls are made, we're able to use that as a strong authentication of that customer, and are then able to more effectively challenge more chargeback codes. So 100% AIS is going to be useful in that. In the future, when we look at variable recurring payments, the consumer protections are going to look very, very different. Different markets will introduce consumer protections to different degrees, and they will develop separately. But what's a really great opportunity is to level out some of those consumer protections more than might be the case currently in some of the bank debit schemes around the world, where they are open to abuse and potential fraud. We currently have ways of mitigating that, of course, but in the future, as we move to VRP, it's going to be really interesting to see how we introduce a sort of more level playing field when it comes to consumer protections.
Great. Well, thank you so much for that. We're going to now head over to our last part of today's session, which is our panel discussion. And so obviously, if there are still more questions, we will pose them across to all of our speakers to kind of go through them. Now joining us is going to be Ben Hartley, who's going to be leading this discussion. Ben is a lead associate at eSynergy that has worked on both sides of the open banking implementation, both at the OBIE and with us to help deliver Metal, which was NatWest's challenger bank. So Ben, I'll now hand over to you to introduce yourself and kickstart the discussion, and just encourage all speakers to join. Oh, you're all here, so that's great. Thank you.
Okay, well, thank you very much to all our speakers so far. It's been fascinating. I'd like to just pick up on a couple of themes that all sets of speakers have actually touched on throughout their talks. The first one is really around the kind of increased flexibility and proliferation of options that are becoming available as payments are being modernized. And I'd like to think about how are you balancing that with user education and potential confusion. We've heard people speaking about consumer consent, and is there a risk that perhaps customers, how do you mitigate the risk of customers potentially not understanding what they're consenting to?
I'm happy to have a go first, if we don't sort of all raise our hands at once. So yeah, it's a great question, and as you say, it's something that I think we all have to think increasingly about, as you have not only different payment mechanisms but also different brands within each payment mechanism, whether it's cards, buy now, pay later, account to account, or what have you. And again, fundamentally, I think it's about making sure that the customer, one, is able to enjoy the experience that they're expecting. Two, we're able to mitigate risk for the customer and the merchant. And three, they're also able to go through as seamless an experience as possible. So just to use that to set the scene quickly on sort of how we think about it. And I think ultimately, what it comes down to is, I think largely to Dipti's point early on, is sort of understanding what local payment mechanisms look like in different geographies and different areas, and making sure that insofar as possible, you're able to serve those payment mechanisms to those customers. I think the other thing that we've seen success with some of our merchants is actually almost aggregating the multiple different providers to a payment mechanism. So, you could provide the option to pay by bank, and you could then provide multiple providers to facilitate that option, or you could offer card payments individually, or buy now, pay later, and then depending on which BNPL company you work with as a consumer or you use, you'd be able to select that one going forward. So I think it's a matter of two things. One, it's making sure you're providing local payment mechanisms wherever possible to make sure that customers are seeing what they expect to see, so you're optimizing for that conversion. And then two, it's making sure at the start you're very clear on what type of payment they're making, because they may well have preferences between credit or debit or other choices.
And then I think, Michael, during your talk, you also touched on the kind of potential for inconsistent development and interoperability issues. So if we're seeing a kind of massive expansion at the moment, do you see a kind of potentially a future consolidation where perhaps we start seeing the removal of middlemen over time or anything like that?
Yeah, it's also a super interesting one. I actually think, in a sense, I don't mean this in a negative sense, but you might actually see a bigger role for the middleman, in that where interoperability becomes difficult, it becomes harder and harder to commoditize the role of payment provider, and the value that the middleman, whomever that may be, who ends up playing this role, will play is in abstracting away the complexity of different banks or different payment mechanisms, and is able to provide as consistent an experience as possible, both for the merchant, importantly, in terms of the factors that they care about, but also for the consumer in terms of their experience. And so if we do see sort of multiplying different journeys or inconsistent journeys, you're going to probably see a couple of players emerge. In that sense, it will consolidate, but you'll see a couple of players emerge who are most effectively able to try and abstract and simplify this journey, both for merchants and customers. So there will be a role for a middleman, but you will see fewer, I think, than we have today.
Okay. Deepti, in your talk, you touched on the kind of innovation gap and how different markets are moving at different speeds. And I suppose that perhaps has implications for what you just mentioned, Michael, as well, whereby if you have actors who are able to move faster than others, perhaps they will capture more of the market. I think one thing that I would like to perhaps go into more depth on is the idea, Lily, in your talk about the kind of market-driven versus regulatory-driven adoption speed. And I guess my question is, in your view, what's most effective? What's likely to drive rollout faster?
I think for me personally, it is all about what Michael was just mentioning, it's just all about adoption rates. It's all about what you're putting out in front of customers, what they're expecting. I think that's where it is. That's the crux of it. It's the simplification of all of this and putting it in a way that customers are making most sense out of it, and then they know what they're signing up for and how are they progressing with that. I think that's something from my perspective will remain the biggest driver on that front.
Yeah, I mean, adoption is going to be I think adoption is going to be a really big component. I think it's also a bit of a lagging indicator. I think at the same time, we're going to have to see, I think, a lot more partnership between both private industry and the regulator as well, and also making sure that the incentive structure is lined up with the banks at the same time. So, if you think about what's happening kind of in the UK and opening up the access of data, for example, in the context of open banking, or making it easier from a competition perspective for a customer to change from one bank to another, or find better ways to save money by either getting better interest rate from from one savings account to another, making sure that the banks have also a really important role to play in that, and that the incentive structures continue to kind of be aligned, so there aren't winners and losers, but everybody is kind of pointed in the same direction.
Because I believe there's only a single mandated use case of variable recurring payments so far, which is sweeping. So do you have a perspective on how perhaps we can encourage the regulator to accelerate that mandate?
Yeah, it's a super interesting one. I think it's interesting for a couple of reasons. I think the point you're making, Ben, is for those who perhaps don't live in the weeds of variable recurring payments, which is completely fair if you don't. The regulator has mandated that me-to-me transactions or sweeping transactions for a set number of use cases must be provided by the big CMA9 banks. And what that means, obviously, is there's a range of use cases that aren't being supported, but it also means that there are a range of banks who won't support, who aren't mandated to support variable recurring payments. And I think first, I think that's primarily true in the UK. And if you look at some of the payment mechanisms that we've seen successful globally, and a couple that Deepti mentioned in Europe, and UPI in India and PIX in Brazil, I think one of the really important, and Pay2 in Australia is another great example. One of the really important factors we've seen is that the banks have been more able to benefit from the work that they're putting in to try and democratize payments or data or whatever it happens to be in order to provide better services. In the UK, for instance, banks aren't able to charge for variable recurring payments. And in the context of me-to-me transactions and sweeping transactions, that's probably not a terrible thing. And I think the Competition Markets Authority and the Open Banking Implementation Entity and the FCA have done a really good job of using sweeping to set up the foundations, I suppose, for variable recurring payments and mandating that banks have to build it. But if we now look abroad and where these payment mechanisms are successful, it's everywhere that banks are able to benefit from the value they create. And I think the source of a lot of the interoperability challenges we have in account-to-account come from the fact that the banks have no incentive to make these things better for the consumer or the merchant. And so I think genuinely, until banks are able to benefit more meaningfully from sort of these additional use cases, we're not going to see a considerable value proposition improvement that would justify it replacing other payment mechanisms. And so I guess to get back to your initial question, I think the regulators have done a really, really good job of setting the foundations and setting the structure and trying to build up the standards around variable recurring payments. I think it would be a real pity if they went further and tried to mandate it for more use cases, because we can see from a couple of the examples and a couple of the banks that we're working with, there is an appetite on the part of the banks to use this sort of secular trend to try and generate commercial returns for all the work that they've been putting in as part of open banking.
And then just to add from acquirer perspective on that one, right? From the customer demand is driving a lot of this. So merchant demand is driving this, and regulators are looking to think more and more on how to impose certain things if it is not already like one click to pay and all of these. You name it. If there are so many things out there today, they are looking to do more on it. And how do they, thinking about Poland, for instance, right? Bank-to-bank papers, the account-to-account is the adoption rate of there is like 80% of their transactions are going through, or almost up to 80% of their transactions are going through that. So if as an acquirer or as a merchant, you're not taking that or you're not supporting that, right, it's not going to work. I think that's the common standard what they have created across Europe. You'll see that more and more, but that's where the demand and supply sort of thing. And don't forget crypto, and there are more new things coming in. Regulators are thinking, how do you need to streamline this? You can't be on a back foot as this. So as Michael said, they've done a great job currently, but if they're not on their front foot, certain things will be abused in the whole payment journey, which they wouldn't want that, right? So they just want to be on top of their things on making some of the API integrations or some of the things more standard across all banks rather than very country specific and things like that. So there is a lot of work going on there as well.
Okay, thank you. And then just in terms of the discussion, if you do have any questions from the audience, please do feel free to continue to contribute them. We can ask them as part of this section. And there's a question from Gal here. Is there any conversion hit by adding an OB friction to the SEPA DD direct debit payments?
Do you want to jump in, Lily? I'm happy to answer either way.
I can give just kind of an initial thoughts on that. I think this is definitely something that we see at GoCardless, and building in better kind of mechanisms for catching fraud as it happens, and protecting both consumers and businesses against fraud. I would say, for example, we have a feature called verified mandates where we use AIS to help verify the account details of a payer going through a purchase. I think logically, anytime you add in an additional step, you're introducing friction, which can have an impact on conversion. It depends like how seamless that additional step is, how familiar it is in the minds of payers already. Is this like an experience that's completely foreign to them, or maybe they've already done it? In many respects, account verifying your account via AIS can look and feel quite familiar to 3D Secure. And so, I think it's just a question of balancing those two things. And over time, we'll continue to get better at it. And to be honest, I think there are other things that have a bigger negative impact on conversion, especially when it comes to fraud, because even if your conversion goes down, you're still protecting kind of good conversion at the same time.
The only other thing I might add is if we think about sort of the OB friction outside the context of just AIS, we think about it in the context of payment initiation. So where you might be taking a first payment using not even an open banking capability, but maybe Ideal in the Netherlands, and then you're taking recurring payments on separate direct debit. Perhaps you're setting up a new phone contract and you're buying your phone at the same time as setting up a contract. Today, what happens a lot of the time is you take card payment for the first payment and direct debit ongoing because of the effectiveness of the recurring nature. If you're introducing, Ideal, for instance, in the Netherlands into that scenario, it's actually not impossible that you'll see a conversion uplift because one, you're reducing the number of steps because you're not asking for as much information to be input. And two, once again, to I think a point we've made a lot today is and to Lily's point, you're introducing a familiar payment mechanism up front, one that's trusted in the Netherlands particularly, and you're then able to sort of seamlessly set up that direct debit. So it really depends on sort of why you're introducing the friction. Is it to stop fraud? Is it to try and make it easier for the customer, and what you're doing with it thereafter?
So I think it's a fairly broad question, but what's next? What does the future look like?
If the landscape is going to grow, and it's going to grow massively to what we are seeing, right? It's all about the optimization. It's all about innovation, which is going to keep you on top of stuff. So I've covered a breadth of things during my presentation, but that's where a lot of innovation and a lot of new things which we are seeing is going to be very data-led. It will have to be very data-led. The amount of data which is out there and how companies are looking to make use of this and actually make this into a powerful tool for the customer is something we are seeing pick up as a massive trend from at least acquirer perspective. Not sure if Michael, you or Lily have something from customer perspective or merchant perspective which you think is slightly different on this.
Yeah, I mean, I definitely think I definitely think the future is exciting. I wouldn't be here otherwise. But I think specifically some of the things that I'm really interested to kind of think about for the future. I think one is definitely VRP or VRP-like capabilities kind of around the world. But also kind of more specifically, like I'm really interested to see what's going to happen with QR codes, for example. You know, if you look at countries like Asia, China specifically, adoption for something like a QR code, the ability to kind of scan anyone's phone, scan any kind of QR code anywhere in any situation, whether it be, you know, digital point of sale or whatever. You know, what kind of adoption are we going to see for that type of payment experience, and how will that impact payer preferences kind of moving forward? So I think that's something that's really interesting as well. But yeah, I mean, I think it's an exciting time for sure.
Just had another question come in. So we've got lots of fintech businesses here in Europe are focusing on QR code payments already. So it should be a good trend to look at. So more of a confirmation there. That's kind of interesting though, because I suppose a QR code there seems almost kind of ultra frictionless. And my concern would be where you increase speed, perhaps user error and or fraud, or the risk of fraud can increase as well. So I suppose what kind of mitigations can you have in place where your friction gets right down to almost zero at that point?
I'll jump in with a couple of thoughts. Sorry, I also want to give a couple of seconds to see if anyone's keen to respond. But first on QR codes, I just think sort of fundamentally it's a really interesting emerging set of use cases, because, you know, we've had QR codes for a long time now, like 20 years probably. And for a long time, it was sort of a solution looking for a problem. And it didn't seem to find that problem meaningfully, except maybe BlackBerry. You know, you could sort of get a new BlackBerry user or something by scanning a QR code. And then partly because of the pandemic, and I guess partly because of preferences changing, all of a sudden, you know, QR codes are everywhere, and you're using them for everything from health passes through to making payments. So I just think, sort of from a technological perspective, it's just a really interesting thing to start with. And then, you know, to your question, Ben, I think the role of digital identity or the understanding of the customer, which is a lot of what DPT spoke about earlier, and using data to understand who's actually using what and doing what and where, is going to become increasingly important. And our ability as payment providers, or your ability as merchants, to recognize that same customer in multiple different scenarios, perhaps using multiple different payment mechanisms, is going to be really, really important to ensure, to your point, Ben, that as we do our best to make things as frictionless for the good actors and the actors who are aware of what they're doing, we're not also, one, putting more vulnerable actors in more difficult positions, and two, enabling bad actors to take advantage of some of these more seamless payment mechanisms. And I think, as I said earlier, it's not just the merchants who care about this, right? Consumers care about this too. They also care about not being defrauded. They also care about not spending money in scenarios where perhaps they shouldn't or they don't want to. So it's not just a merchant problem, it's also a consumer problem. But the problem is they're also looking for less friction. And so it does present a challenge. But I think it comes down to knowing who that person is and using a lot of the data at your disposal to have a better understanding of the context around that transaction that's being made.
And also the addition of, like, you know, more payments are being done over mobile. QR code is perfectly optimized for mobile. And you know, more and more like biometric authentication and more secure kind of verification mechanisms on the payer side as well that are less laborious can maybe help mitigate against that.
Great. Well, I just wanted to finish us all up now, and that's the end of the panel discussion. I just want to say a huge thank you to all of our speakers today. Just to let everyone know, we will be sharing the recording as part of the follow-up email. So if you do want to rewatch anything that we've discussed today, that will be sent out to you and shared by email. I hope everyone has enjoyed today. Please do reach out if you'd like to find out how eSynergy can help your organisation further on your journey, or if you'd like to be part of our community and perhaps share insights at future events, we'd love to hear from you. So thanks again to our speakers, and Ben, thank you for hosting our panel discussion, and we look forward to seeing everyone again real soon. Thanks, everyone.